like you see the industries that are the most excited at the moment are, all the companies that are very much into AI, into self-driving, into robots and all that kind of stuff. But there's another group of company that the markets for some reason is not as excited, maybe due to the uncertainty.
Salesforce is pushing the idea of digital labor, meaning that you can have virtual assistants to help you with your daily work, but they are starting to show results, right? They've closed 1,000 deals on generative AI, even though it's just been a few months out there. He feels that the digital labor can take over the coding work is quite an eye-opener.
Welcome back to Chills with TFC. I'm your host, Reggie, aka your Chief Financial Coconut. And today is a interesting topic. I would say it's interesting because it's been a long time since I had the energy to really follow this market. But the US stock market continues to be an interesting place for a lot of growth investors, a lot of pickers, So I definitely have to invite some of the more established ones. Right? So yeah, Chin and Thomas, for our audience that don't know you, could you introduce yourself?
I'm Thomas, and I write at steadycompounding.com, and that's where I break down businesses and share a lot of investing lessons.
How long has it been?
It's been about 4 years. I started around the same time
Yeah,
as
about
you.
the same time. Yeah. Then
But
we
that was
always
when we
motivate
started
each
off
other.
in Zoom, then to the Golden Mile one, then to all your different offices.
Yes. Thank you. Thank you for continuously supporting us. I'm glad we both survive. Right? It's still kind of going on. So yes, check out his blog, steadycompounding.com. Yes, and
I'm Chin. I'm the co-founder of the Smart Investor. We've been around since 2020. Great time to start investing because the pandemic just started during that time. But before that, I was with the Motley Fool for uh, since 2012 or so. Yeah. First voluntary, then after that as part time, then full time.
great. So and I heard you have a lot of multi-baggers, right? Thomas was saying.
Yeah. Netflix, Amazon, Apple, Booking.com or Booking Holdings. Intuitive,
Too many
Surgical,
already.
Yes.
Alphabet.
Yeah. So are you gonna give us some multi-bagger ideas at the end of the
I
podcast?
wish I could. The thing about it is, I think nobody buys a stock thinking that it's going to be a 10 bagger or 20 bagger. If you ask me 10, 20 years ago, did I expect Apple to become like 20 or 30 times what it was worth? I would say no, because it's crazy to think that there's going to be $1 trillion company, right? It's just not logical at that point of time.
Yeah, fair. But now, it's a thing.
Yeah.
And I think today I wanted to bring you guys in to really discuss whether is this thing still intact, right? Because a lot of people are now, okay, maybe not say a lot of people, but there is a much bigger group of people that are interested in the US stock market than in the Singapore market. Right? Don't laugh. Don't laugh. So the Singapore market need to buck up, but that's a different discussion, okay? So today I want to focus on the US market, right? And I think we'll try to go deeper into some of the major trends that are happening around, hopefully give you guys some ideas, to play around with in 2025 lah, okay? So maybe the first question we can rock with, right, will be like, is the US kind of stock market growth story still going to be intact for 20, 30 years more, right? Because at this point in time, a lot of people look at it as, okay, S&P 500, 8% year-on-year growth, right? That's kind of like the mantra out there. So is this going to be first intact, right? So I think that's where I want to start. And if it's not going to be intact, are we still going to be able to find winners in this market, right? Because I think it's a personal question because I've been very busy these days. I got no more time to, read full statements and all. So I'm just kind of just following the stock picks that I have been doing for, however many years ago, and I no longer have capacity to learn new things. So just want to hear your point of view. Like, is the US story intact, right?
Yeah, so I think the US story, long story short, if you are looking at 10, 20 years, I think it is still intact because they have a system that works, right? It doesn't mean that the businesses of today will be the same winners we see in 10, 20, 30 years. It's very likely going to change. But historically, they do have a system whereby, they are able to deliver very reasonable returns of 8 to 10% over the long run. Businesses-wise, I think they are going to continue to do well. But valuation-wise, is a little bit on the higher side today, right? And when valuation are steep, then we probably can expect the returns over the near term. Maybe it may be bumpy or We will have to see what happens. But when we look across even within the S&P 500, across all 500 companies, not all are priced the same. Some are more expensive than the others, right? Overall index a little bit on the steeper side, but if you were to look within this entire bucket, there are still a lot of fair value or reasonably priced companies today, and they are still high quality, but the market is more excited about certain companies over the others.
So if I don't ask this question, right, my audience will fire me, lah, right? So where are the interesting things based on what you say? Because that's what you said, right? There are more fair value companies, in the overall. Okay, we're not giving you financial advice, right? We're not recommending anything. It's just a discussion, trying to understand where you see some of these more fair value spaces.
Like you see the industries that are the most excited at the moment are all the companies that are very much into AI. Into AI, into self-driving, into robots and all that kind of stuff. But there's another group of company who's, that the markets for some reason is not as excited, maybe due to the uncertainty. Back in 2022 or 2021, when Apple, started the ATT, which really undermined Meta's business performance, the market started to really hit on this company. But Mark Zuckerberg started investing in AI even before ChatGPT came about. So even before this whole revolution thing came about, and he was already investing heavily, and you're starting to see a lot of the fruits of AI start to really bear fruit, from the advertisement targeting to the recommendation to your feed being more relevant. And then now they are even implementing Llama, right? Not just ChatGPT, Gemini have, a LLM model, but Meta also has one, right? But the market still isn't that excited over it. I think the PE is still around 22 or 23.
Oh, that's okay.
Right. And then Adobe is another one that the market really dislike now. It's at a historical low in terms of its multiple, because the market isn't quite sure whether they are able to monetize in terms of Gen AI going into the future, right? And I think for a lot of these companies, it's not the first time. Even for Google, it's not the first time they have tried to navigate around these huge platform shifts. But the market always like to react first and then verify later. As investors, we have to think about the price, the probability, and whether the opportunity set today makes sense.
Okay, we'll go there later, right? But I hope the Meta Business Suite gets better. The back end a bit crumbly, but that's a different discussion, right? And my team still use Adobe, no matter all the new interesting AI comes out. Like we will use it as an integration, to some of our processes, but the core is still a lot of these big editing softwares. So later we go there, right? Yeah, Chin, what about you?
I think I agree with Thomas. I think one of the most interesting areas is really definitely generative AI and more broader on AI itself. So I think what we need to remember is ChatGPT is roughly about 2.5 years old. So it's quite still very early in the stage, right? So I think the initial stage is very much about building infrastructure. So the likes of NVIDIA has really benefited. I think the likes of Arista Networks has also benefited. These are the people who are building the roads to deliver AI, right? But 2025, I think, could be the time where application starts to emerge and show how they actually are able to monetize, all these investments or heavy investments they have been making. There are three sort of points which I think are quite interesting recently. Number one, Salesforce is pushing the idea of digital labor, meaning that you can have virtual assistants to help you with your daily work. Personally, I'm actually still a bit skeptical about it, but they are starting to show results, right? And they've closed 1,000 deals on generative AI, even though it's just been a few months out there. And the CEO has actually made the bold statement that he's not going to hire any software developers in 2025. So I think that is a big statement coming from what I consider to be an OG in the software and the software as a service space, to have that sort of stature and say that statement where he feels that the digital labor can take over the coding work is quite an eye opener. Second one, I would say, to sort of add on to this point, I think Meta has also said recently, Mark Zuckerberg said it in the Joe Rogan podcast, where he said that they're going to start testing or using AI as, he called it like a mid-level engineer, right? And they're going to start pushing that idea and having more of its code generated by AI itself. As a side note, Google has also mentioned that new code written is all done by the AI right now. So there are definitely, I think, very consistent message coming out from the tech industry where coding is one of the areas where they can make some productivity gains. The last example I have is the statement from the Goldman Sachs CEO, where he said that in the preparation of the IPO prospectus, right, they call it the S1 in the US, 95% of it can actually be prepared by AI itself within minutes. It used to take 6 people, I think, a few weeks to do it, and now you're able to do it within minutes, 95% of it. So I think these are the sort of real tangible benefits you can see. Because up to now, I would say most of the sort of like growth, except for Nvidia, of course, but most of the growth you see, say in a Microsoft, they've been making a lot of noise about AI and so on, but it's mostly incremental rather than revolutionary.
So just to be clear, right? You're saying that am I hearing that the infrastructure level, the ship has sailed already. The winners have already been chosen, right? And then the next round, we'll be looking at this kind of application for optimization, and is that kind of what I'm hearing?
So here's the thing. From my
I love the apprehension, man. Too clear is not good one, right? That means there is
no,
yeah.
it's like when I was investing in Apple, right? Just to give an example, my only benchmark was Nokia, right? Don't laugh, huh?
If you don't know what is Nokia, put in the comment section, okay? Then we know which generation you're from.
But my point here is like when Apple came out, it was a phone. It's called the iPhone, even though you don't use it as a phone nowadays. But your only benchmark is Nokia, right? Nokia was making something like 70 to 80 billion. And you would think that projecting revenue beyond the biggest mobile phone maker in the world is ridiculous, right? You're being too bold, you're being too bullish and so on. But that's what happened, right? And the thing about the US market is I do not know how big this thing is gonna be. So I want to leave uh, room to be surprised, basically,
Yeah,
because
I think Chin touched on a very good point
yeah,
because it's not just like Nokia to Apple, but when we look at Uber, right, when they first pitched to venture capitalists, the amount of total addressable market they were using is only the yellow cab, the yellow taxis. And when the use case started to come out, it exceeded by multiple fold, right? Even if you just look at the total taxi market, I think it's about 5-6 times of that because people started buying less cars, people started to replace cars ownership with just Uber, right? And I think that's the thing about technology. When you're able to reduce friction, when you're able to deliver value, the current market size, right, sometimes is not a good gauge to what this could potentially become.
Fair. That's why COE prices are so high. Because the bidders are no longer end consumers. They are commercial parties. They are building the layer in the middle. Right. Oh, okay. So that's another discussion. Yes. So before we go further, I want to go deeper into some of these sectors, right? But just want to hear your point of view about the US. Is it going to stay intact? Yeah. Because you already say, right? Then we went on a whole tangent of AI, which is great, right? But I want to hear, just to sum up that part, on like, so you think the US proposition for the next 20, 30 years will still be intact. Like people can still buy broadly diversified and just sit on it. Don't need to, be like hunting for winners in the market. Is that a fair statement?
I'm a long-term investor, so I always believe that over the long term, the market will be created by the innovators, right? If you've seen the evolution of internet on desktops and then mobile phones extending internet to the rest of the world, and now we are seeing AI potentially becoming the next big platform change. And I think one of the things, speaking of the US market, a lot of it is also driven by the largest companies. I think one underrated thing is that uh, a lot of these trillion-dollar companies, they're actually pretty young. Think of Mark Zuckerberg. In 20 years' time, he's going to be the same age as Jeff Bezos, right? So he's still extremely young.
The bro has time.
Yeah. And he's still leading a company, right? And to your point, because you mentioned 8% growth.
That's kind of like the reference in the market, right?
Or maybe 10% growth.
8 to 10.
I think what investors need to know that 8 to 10% usually doesn't happen in the market because like that's the average, right? So it's a bit like putting your hand in hot water and in a freezer and you don't really get the average from that, right? And the thing about it to understand is the market can decline, the markets can correct. It happens maybe once every 2 years. You do not know when it happens because there are periods of time where, there are 2-3 years in the market where there's no correction at all. But overall, I think the market goes up 75% of the time. So those are your odds. Doesn't mean it'll happen. That this year could be that 25% chance where the market actually falls. So as Thomas mentioned, and I do agree, the market does seem like overall to be pretty expensive. But if you're a hands-off investor, that is what you're supposed to be, right? You're supposed to be hands-off. If you're going to be worrying about like what's happening, why is this index dropping, then you're no longer hands-off. You're supposed to be hands-off. You keep on investing. When you do that, I think it's good for people who are able to spend more time doing things they love.
Okay, fair. So let's talk a little bit about Meta,
Sure.
Zuckerberg, he got 20, bro's got 20 years, right? So come on the show. Next time you're touring around, I want to see you in the studio, but extending that discussion, it's across the whole like advertising ecosystem, right? Because, okay, so everybody built all sorts of weird things at the top, okay? Like whether is it Google, whether is it Meta, whether is it Amazon, everybody builds something at the top to capture the audience. Then so-called the elegant way to monetize is advertising, right? So at least there was a period of time where that was the mantra,
That's an
right?
important point.
Yeah, important point, right? So just want to understand how you guys see it because, they can launch all these AI, launch whatever thing that they want to launch, but the core business is advertising, right? So is the advertising ecosystem intact, and that whole, is it going to continue to grow? Yeah, just kind of give us some idea there.
So for the case of advertising, I do feel that the value proposition which Meta provides and the value proposition which Alphabet provides is quite different, right? If you just imagine when you search for something, you're searching for a plumber, right? And you need it right now. And you need it a plumber which is near you, not someone in the US or Malaysia, right? So I think the value of Google compared to, for example, newspapers, was that it was able to provide that name or that recommendation, right in front of the person looking for it at that moment which they need it. Because you don't need a plumber all the time. You need it when your pipes burst or when it becomes an emergency, right? So they're basically monetizing intent, right? And to your point, I think that is a very underrated part of Google because until Google came along, um, I think the internet was having problems monetizing traffic, right? You can have all the eyeballs in the world and all the traffic in the world, but monetizing it was an incredible challenge. And Google was the one who sort of paved the way and showed people how you can actually monetize this. In the case of Meta, I think it's more about high up in the funnel where you're trying to find leads.
Or even seeding ideas, right? It's a very
Yes,
high
correct.
up in the funnel. Yeah.
And segmenting and like finding the niche which you're able to target is, I think, still quite valuable where you're able to target, for example, age group, location.
Yeah, so I think Chin touched on a very interesting point because pre-digital advertisement days, right? A lot of marketers or a lot of companies, a lot of bosses will say, I know my marketing spend works. At least 50% works. I just don't know which 50% works. But right now with digital advertisement, you are able to know how much you are spending for each lead and whether they are converting or not. So in a sense, they take a lot of guesswork and a lot of costs out of advertising because you are only buying things or rather add inventory that can actually convert and you're able to get immediate feedback loop. Be it you're advertising on Amazon, be it you're advertising on Google or you're advertising on Meta, right? And I think when it comes to moving forward, I think this trend is very likely going to persist, right? Because when you compare this against the traditional way of advertising, be it mainstream media or your billboards or giving out flyers, right? Yeah, all those TV. I mean, they aren't just losing audience or losing size, but also they can't provide you the feedback, or that level of targeting that you're looking for. And I think with AI right now, a lot of business owners, especially small, medium businesses, when they are running ads on all these platforms, they have to hire agencies because it's not exactly the most intuitive. Like you mentioned, the Meta Business Suite, right? It's not exactly the most
Damn annoying. Please improve. No,
Not
because
Zuckerberg.
yeah, hey brother, please improve.
But I think going forward, the end state for digital advertising is you are just going to tell Meta who your target audience is and then how much budget you have. Then they will take care of the rest. Right? Then that opens up to a lot more, a wider world of possibilities. Lah. But when it comes to investing in companies who are heavily reliant on advertising, it's always important to know that while this is a circular tailwind, it is still cyclical in nature. Less cyclical than developers, less cyclical than a lot of other businesses, but it's still very much dependent on how much the economy is doing, how the consumers feel.
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And yeah, we'll see you for great content on Chills with TFC. Let's kind of move on into the SaaS, which I think it's kind of ripe for consolidation already. There was a period of time where there's all sorts of enterprise sales products, right? They were just popping up, down, left, right, everywhere, right? And then, nowadays it's like some of them are just not able to monetize. There was a very big firing cycle in the tech downturn, so it's kind of where it is, right, at this point in time. So how do you read this sector, in the US, going forward?
Yeah, I think the sector in the early 2020 or even 2019, there was a lot of cheap money going
A
around.
lot.
A lot of cheap money. So like you start to see a lot of these businesses coming up. And back then, a lot of their customers still had a lot of budget allocated to all this software because everybody is trying to digitize. And when COVID came about, the urgency came even bigger. Suddenly the budget just opened up. And a lot of these companies, they were pursuing growth at all costs. And then until we had a consolidation period. And I think going forward, because like earlier they were chasing all this growth and they were hiring laborers at extremely high salary band, right? And you start to see them consolidating. But the next big thing that a lot of their clients are actually allocating budget to is artificial intelligence, right? That's what the CTO is telling, or rather, what the board of directors and everybody wants. The budget is shifting from software to a lot of this AI related investment. And you start to see a lot of these SaaS companies starts to adapt, right? Because they're not going to stay still. So I think like what Chin mentioned earlier for Salesforce, they also started to come up with, I think they call it agentic
Agent Force.
Agent Force, right? Agent Force, yeah. And I think a lot of these SaaS company, they are in this period, right? Whereby they have to navigate how they want to change their business model. Because previously they have always priced based on per head count. But if AI is going to bring in productivity, improvement, right? Are you still going to need so many people? And so they have to realign their business model to charge based on how much value is actually captured.
I never thought of it from that angle. Yeah,
Yeah,
because
this is a
now it's per
problem
head count. Yes,
they are
yes.
facing right now because it is going to replace headcount,
Mm.
right? If your key value proposition is productivity increases, then you have to figure out a way to charge. And I think again, Salesforce is the one leading in this direction. Mark Benioff is one of the most vocal one about this change. And I think you will slowly start to see other SaaS company follow as well. But most importantly, all these SaaS company have to start to innovate and think about how they want to include AI within their offerings.
Yeah. Help me understand. Do you think the Chinese companies are giving them a run for their money? Like Lark, some of these guys.
In terms of the SaaS
Yeah, in terms of the
companies.
SaaS categories. Because for us, we use a combination of workplace products, right? Slack, Notion, ConvertKit, across the board. And at some point, the cost racks up, right? And it's very annoying, right? And then you have a player like Lark, which a long time ago was a shit platform. Sorry, a long time ago was a shit platform. It's very clunky. But because TikTok hires like what, tens of thousands of people, right? They innovate on it very quickly. Now it has all the features that we already use, and they offer maybe 1/10 of the price consolidated, right? So it is a bit more mahuan to shift from a software to another software, right? There's the whole transition period. But if the value proposition is strong enough, right, it could really eat up a lot of the smaller SaaS companies in the US, by sheer fact that they are coming out, they're setting office in Singapore, and just kind of like going out. Any thoughts of some of these enterprise Chinese companies giving a run for the US SaaS?
I think sort of like key part about Salesforce is as they move up the value chain, they start to offer bundles of software, which is also what Microsoft does, right? They are pushing the Copilot whether you want it or not. They have lots of different software compared to a small vendor which only has one software, and they are not able to do that, right? So they're forcing companies to consider, like, if you want Excel, then you have to have Copilot too, right? And you have to pay for it. Otherwise, don't use Excel, which makes it very hard to turn down. The other part is that a lot of the selling doesn't necessarily happen from the company itself. Also, they do engage external vendors, especially when you move into certain industries or engage with certain customers. I think uh, the partnership program is really one of the key growth areas where no matter what SaaS you are, whether no matter what industry, whatever SaaS solution you provide, the external vendor always plays a huge part in helping you address all this.
No, I think like for smaller businesses, they would be more keen to try. But I think for a lot of the larger businesses, I mean, they have the budget for it, right? And no CTO would want
To
the X
risk
on
it,
their
right?
head
Yeah.
in terms of this. So I think most of the larger businesses would still prefer to stick with what they already have, right? Big names, because nobody, they always say nobody ever get fired for going with IBM, or in this case, like, nobody ever get fired for going with Salesforce, right? And I think like even if we were to look at to just Zoom, I think when they first became extremely popular, there was even concerns like their servers were in, I think, China or something, right? And I think this will always be one of the concerns for big American companies.
And then recently there's a CHIPS Act or something, tier 1, tier 2, tier 3, right? So it's just gonna make it more and more exclusive lah. The US market is gonna close up and become more and more exclusive, right?
It's
So
the bifurcation.
yeah,
of-
bifurcation. So you have to hear from the management that they know what's going on and how they're gonna gameplay this lah. So if let's say we write off the Chinese companies in the next decade, right? They have a long time to go.
We don't write them off, lah, but
We don't write that off lah. Okay, but it is what it is,
Yep.
Then I want to kind of understand how you look at things like SAP and Oracle. Some of these older enterprise softwares, right? Where Salesforce is like just eating, but they are very, like what you say, very professional, right? They own the whole integration system of the hotels management. Some of these like very deep, whole sector use their ecosystem type of thing. Do you think that they can continue to be around, or their lunch is gonna get eaten up by these SaaS?
There's a concept by, I think his name is George Moore. It's called crossing the chasm. He posits the idea that selling to early adopters is very different from selling to the majority. When you sell to the early adopters, these are the type of customers which are curious, which will likely approach you, are more open to ideas, and are willing to give anything a try if you provide a good enough benefit. But there's this like huge chasm, right? When you go from early adopters to the early majority, because the early majority are the people who do not want to change, right? They, as Thomas mentioned, they are the people who they're looking at what everybody else is using, and if you're not the industry standard, they are not interested in engage with you. And selling to that group is a lot more different. What Viva Systems does, which is a SaaS company which provides CRM software and software to manage their clinical operations and so on, is that they try to create a sort of success case within the industry. So they put all their energy to create a success case in one of the early majority people. And once they have that success, they can take that as a reference point and go to the next customer and say that I just installed this software in your competitor and I delivered a 20% savings or something to that effect, right? I'm just giving a number out. And I think that's very compelling, but also quite difficult because you have to create success story after success story and really enter that industry. So it's a very sort of different way to actually sell to the industry. In the case of Oracle and SAP, I think that so far, I think it's a bit like changing your Nokia phone as long as it works.
It
It took a long time for me to change my Nokia phone because so long as it's not too far behind the other technologies, because changing is really a pain, right? I've been in operations before. You can't just stop everything and
It
just
takes years.
switch over, right?
Yes.
Installing Oracle, I think, takes years even.
Yeah.
And it's very painful. So to undo everything, it's really painful. I think one of the underrated things in the case of Microsoft, even Oracle and SAP, is that they have all these connections and trust from their customers built up over the years. So I think that the customers are probably willing to wait for them to actually do that change. But of course, they can't just sit still and say that I just provide you the same software.
Yeah, I can imagine the CTO conversation.
Yeah.
Hey bro, jalat lah, need to improve lah.
Yeah.
But okay lah, no try. I give you some time, but you faster, okay?
That could be the conversation.
I understand.
Yeah, I thought the crossing the chasm concept is a very interesting one because just yesterday I was speaking to a group of people, I think around 30 plus people, and I was asking people, what do you use for your search nowadays? And most of the people is actually 100% still using Google. So I was surprised nobody said Perplexity. Even when the technology is already pretty decent results, there are still very few people who would actually try. So like the concept of the early adopters and the majority, it is very real. And I think with this strong inertia going on, it actually buys a lot of time for even the more traditional Oracle and SAP to actually start to innovate and bring in new solutions, right? They are starting to implement going into the cloud and all that whatnot. They are late. They are 100% they are late. But the thing is, this market is continuously expanding at the same time, right? So even though on a percentage terms they may be losing market share, they are still growing pretty okay.
Yeah.
So they are not always the first person to come out with the technology. Apple's the same way. But I think when you're incumbent, you can do that.
Yeah. There's a gravity lah. Gives you a bit of time. Okay, fair. So maybe last category I want to kind of understand because recently you were traveling in China, right? So this whole Chinese thing is kind of open up a whole new, interesting point of view, right? I was following your stories, so you can follow his stories lah. Then you can see what he has to say. But I wanted to find out about this whole US brands, type of ecosystem because it's been a long time. Okay lah, other than Lululemon, it's been a long time since I hear like very big US brands that kind of like rode the wave up. Like maybe about 5, 6, 7 years ago, there were a lot of US brands that were talking about like, oh, Asia is our market. We're gonna come here, expand, and then like ride it up. But it's not really happening anymore. I don't hear it as much, and I don't see as much. So I want to hear your point of view from the consumer type of brands, like where is the US heading towards, is China giving them a run for their money, or can they expand beyond the US or like what's going on? Maybe got multi-bagger ideas, yeah.
No, not really.
Yeah. People listen 40 minutes for multi-bagger ideas.
Yeah, I mean, Apple is a multi-bagger since 2016. So sometimes you can miss the initial wave and still make a multi-bagger.
The winners can keep winning, right?
Yeah, I'll just make a short comment because I think that a lot of people always think that, no, I missed this big run up and therefore you missed it. You didn't, right? I bought Apple in 2010. I already missed 3 years of the launch of iPhone, right? Bought Amazon in 2010, which sounds like a long time ago. But no, the company was already listed for 13 years before that. So I wasn't early at all. But still, it was able to generate significant amounts of returns. And back to your point, China, I think is a really difficult market. The moment you go in, just based on my personal experience, whatever you do will be copied.
Yeah. I think on the ground, the Singapore entrepreneurs are saying you have 5 years. You bring in a new thing, you have 5 years, you better run, right? And then, the copies come.
It's very rampant because I don't know whether it's still true, but the career path in China, for example, is people jump jobs every year or every 2 years, right? And once they jump jobs, they bring the sort of ideas from the previous company to the new company, and that's how the copying happens. It was never an easy market. For example, I know that Starbucks was in China for like 9 years before they became profitable. And it takes a lot of courage to persist for 9 years. But then on the other hand, you have companies like Lululemon, which is doing extremely well. They are growing
Still 30 over percent
Yeah.
for many quarters.
But on the other hand, you have like Nike, which is not doing well in China. So you could have sort of say that it depends on the brand, right?
Just to dig a little bit, right? Is there some sort of executional excellence in some shape or form that you have observed that is needed for them to succeed in that sense?
I think the good contrast for Lululemon and Nike is that Lululemon started as a community, right? So the way they sell is they go into the country, they create communities, so like yoga teachers and so on, and they sell by association. Oh, my yoga teacher is using Lululemon, so I should use it too, right? And that's how they get people interested and how they are able to sell all their products at most full price, right? In contrast, Nike actually expanded overseas, and this is a more traditional way of growing. They use wholesalers, so the likes of JD Sports, for example, Royal Sporting House, people like that, those who aggregate different brands and bring it to one location, they sell through those people. And recently, I think there was some huge missteps at Nike where they tried to do what Lululemon does. I want to do more like direct to consumer, sell on my own stores, sell on my own online sites. But the problem was um, they mistook the pandemic success as the sign that they could move full steam into direct to customer. I felt. And I think it proved to be quite a fatal, not fatal, they're not dying, quite a significant misstep for them, where they sort of abandoned their wholesalers and try to sell on their own sites or stores, right? And this wholesalers started selling other brands, and the other brands started eating their into
The
Nikes,
athleisure market is very competitive.
yeah,
You lose 1 or 2 season,
your Hokas and your Ons and so on.
they will come, and then the next big star will be signed to another brand. It's a
Yeah.
very cutthroat, very quick one.
Yeah.
So it is what it is. I hope today's episode helps you better understand where the US is, some of the trends that's happening, some of the fundamentals that you can learn a little bit more about. And if you have any other questions, put it in the comment section. But in closing, maybe give us a little bit of an idea, where are you spending more effort in hunting for interesting companies for 2025, since our audience stay until here?
I think it's important to know, like, one very common question I get is, like, this industry is growing so fast, like AI is the next big thing. Shouldn't we be looking there, right? But I think one very important concept for investors, because our ultimate goal is to make money, right?
Yes.
It is not just enough to look at an industry that's growing very fast, right? At one point, when aeroplanes were just invented, it was growing very fast. When automobiles were just invented, it was growing very fast. But the more important question for investors to think about is how much of this value actually get captured by the businesses and accrues to the shareholders, right? Because at the end of the day, if you are looking at businesses that don't really have a barrier to entry, right? A lot of the value is going to accrue to us consumers, which is great. But it's not as ideal to invest in this sort of company. So ultimately, the kind of company I'm still looking at will be companies that are able to capture this form of value. It doesn't have to be in revolutionary industries, right? It could be selling yoga pants, but it could be selling just pants. It could be restaurants. It could be whatever it is, right? I don't really confine to a specific area, but the most important thing is value accretion. Does it have enough to be left over to the different stakeholders in the ecosystem?
Okay, fair.
I think to Thomas' point on airplanes and so on, one of the interesting things which people might not realize is that Warren Buffett's one of his worst investments was actually in a company called US Air, which I think lasted for multiple years. He often talks about it, where he even went to the point where he said that if the creators of the airplane, they should just shoot them down before they created it, because it's such a terrible business, right? But as he's saying that, one of the best performing in the US stock market was actually Southwest Airlines for a 25-year period, right? I can't remember exact period, but there's a 25-year period where Southwest Airlines was actually the best performing stock, right? And that really shows you that even Warren Buffett can't pick winners. Right? And it's not a criticism of him, but sometimes you can buy into stocks where, or you may look at an industry like airlines, which you think is going to grow, and you might pick the wrong winner. So my first message is that I do diversify a lot, not because I want to be like spreading my risk, but when I diversify, I'm trying to look for more possible winners. I don't actually know which one is going to win, especially for emerging industries like AI. You can't tell who's going to be the winner, right? For me, it's a matter of after that, watching how these companies grow. And the ones which do well, I reward them and putting more money into them. Second point, which I want to make, which I now will forget, is I think to Thomas's point, the best stock which you buy is not necessarily the best performing stock, but it's the stock which can do well and can hold on to it, right? Because if you have no conviction to hold the stock, you're gonna just let it go at the wrong time. And this can happen. So it doesn't really matter to me what industry you invest in. If you have good knowledge of that industry and you've studied it for really long and you're able to buy stocks within it which can do really well over the long term, that's more important, because the most important thing is really about knowing what you want to own from the stock market and what stocks you want from the stock market and not what the stock market is offering you. I think that's an important mantra in the way I invest. Final point, which I now remember, is growth trends and good returns are not always the same, right? And what I mean by that, there can be growth trends which look very promising, But if you don't have the right players within that industry, it can fail as well. 3D printing, for example.
Oh yeah.
IoT. There's always this message about how many products using IoT, but I don't see a lot of winners within that industry. So sometimes it's not just about like something which is growing and has great potential, big ideas and so on. If you don't have the right players to take advantage of it, or they're not able to come up with a profitable business model for it, very underrated thing, then it might not work out, right?
Yeah. So I think the only viable one that's doing this IoT thing probably will be Xiaomi. Yeah, they have a wide enough thing, and then they have the new car system, assisted living, and all that shit. But that's another discussion, another time. So thank you for your time, spending with us in the studio and dropping us a lot of interesting ideas. If you all have any questions, please put it in the comment section. And then if this episode does well, like, share, subscribe, then we will come back again, right? So very simple. Okay, so with that, that's the end. Thank you. Bye-bye. See you all next week.